Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market tested the 88 support and found responsive buyers active at that area, and we got a bounce up towards the 03, 01 to 03. And at this point, we know that contextually, after yesterday's strong sell-off, the sellers are more dominant and in control. Short term, heading into the open, we're going to keep an eye on 95 quarter, 97 quarter, using that area as the micro bull bear zone. Holding above it doesn't necessarily mean that we're going to get a strong breakout because we are in a overall bearish market right now short term, but we would want to see a break below 95 quarter, 97 quarter to confirm that sellers are still dominant. And at this point, if we can hold below 95 quarter to 97 quarter, then on the downside we can retest 87.5 to 89.5. If we head down there, it's unlikely that that zone is going to hold at this point. It held on first test in the overnight session, but if we head back down there, most likely the zone will break and we'll see a test of the 84.5 high volume node and the 81 to 83 initial support, which is the primary downside objective. Now on the downside, 81 to 83 is a good target, but we don't necessarily want to trade it on the long side from 81 just because even though the market can react at that zone, the selling doesn't necessarily have to shut off at 81 to 83. But it is an important support idea. That zone essentially marks the bottom of a bigger picture balance, and for that reason, as we head down there, we do want to at least take profit on the short side. And then if something sets up in real time, where let's say if there's a massive positive divergence on the advanced decline, or the Russell's holding up quite well, or there's some signal that there could be a good long there, then perhaps we'll consider it. But the understanding is that at this point the sell side is more dominant, and if we break down, then we can quite easily hit 81 to 83, and potentially even down to 76.5, 72 to 74. On the upside, the short-term resistance is at 01 to 03, and a breakout above that zone would mark a breakout above the overnight range and overnight balance, so that could lead to some short-term continuation up to 06.5 and potentially 10.75 to 13 quarter. But given the overall short-term bearish context that we're trading in, breakouts are more likely to fail rather than sustain and continue. So we're just going to be cautious on the long side. Be careful on any breakouts, just because after yesterday's strong sell-off, they are more likely to fail rather than continue. And in the event of a strong breakout above 03, we can still short the market at 10.75 to 13 quarter. In the event of some really strong buying, 16 quarter and 18 to 20 would come into play. But we would need to see some very strong buying for those areas to get tested at this point. But if they do, they can still be good short setups on first test. But the primary resistance above 01 to 03 is that 10.75 to 13 quarter, and the market has potential to fail at 10.75 to 13 quarter if we actually get up there. But right now that's not the zone that's really in focus. Right now we're really going to focus on 01 to 03 and 95 quarter and 97 quarter. Again, holding above the micro bull bear doesn't necessarily mean that the buy side is very strong, but we do want to see the market break below it in order to get a confirmation that at least the sell side is continuing to press here. And if we do break below 95 quarter, then we can head quite easily down to the gap, pre-market support, and then finally initial support. So the overall bias is bearish. Short term, the micro bull bear will provide us with a clue on just which side is being more dominant, and we don't want to see the market continuing to hold above 97 quarter. We do want to see a failure at that zone and then a continuation down into 81 to 83 and potentially even lower. So we're going to be more active and more aggressive on the short side, more cautious on long setups in this market, unless the market really gets overextended on the downside and exhausted, which might not happen until 72 to 74 or 67.5 to 70. So that's really how the market is laid out at this point. So off the open, we'll just keep an eye on the micro bull bear initial resistance, with the idea that the market can fail at these zones and actually head lower. So the focus will be more on the short side. If in real time we're seeing a lot of signs supporting an upside move, then we'll have to be, a bit selective and pull back a bit. But that doesn't mean we have to be aggressive on longs. That just means, we'll get a little more cautious on shorts. If we break out above 03, 06 half, 1075, 13 quarter are still spots where sellers can be active. Overall, this is still a bearish pattern that we're in at the moment. And, for that reason, the short side is going to be the primary focus today. So let's see off the open, how the market reacts to the micro bull bear to initial resistance, and we will take it from there.